Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, November the 24th, the year 2019. Let's talk trading. It's time for the weekly open and gap. Last full week of the month. And during this week, make sure you apply risk management to each and every trade so you don't lose more on any one trade than you're willing to lose on any one trade. In fact, I was talking with a trader, and they said, I guess they showed my video to one of his buddies, and he said, after about a week or so, he's like, I can't stand it. He keeps talking about this money management. It's like enough already. And the other guy goes, no, you need to hear it 100 times. That way it'll burn it into your brain and then you won't forget to do it, which is true. Okay, here we go. Looking at the weekly screen, we can see we have some gaps that have filled and some that haven't. So we're into about the fifth or sixth hour of the trading day here, and there's still opportunities to get some of those gap fills. You can see here that the dollar yen's already filled. It poked its head in the lower wick zone and it came out of it. So right now we're 13 pips above the open. On the daily, okay, we're 87 pips below the yearly open. And as you can see right here, we're in the opening range of the first trading day of the year. We've moved in there. We're still putting in, since today's Sunday/Monday, depending on where you are, we're still putting in that range for this week. You can see here on the buy zone for the week what's happening so far. We got a trigger there if you're doing weekly buy zones. Here we do have the month range up. Okay, so the range so far is 160, and the average range is 315. So you can see this month is definitely lagging, way below average. Now we have an inside bar trigger here to the north at 108.85, inside bar from 6 days ago. And you can see some of the other candidates for inside bar trades right along here along the dashboard. Oh yeah, in fact, let me go back here. Somebody was asking about this indicator. It's the 2017 TRO dashboard that I send out to donators from 2017, 2018, and 2019, only because I haven't started the massive update that's going to take. But it is up to 125 functions. In fact, I put in a new function over the weekend that I have to test out before I release it. Now, I'm not even going to tell you what it is, but it'll be coming soon. Okay, back to inside bars. And the range so far, not much to speak of. We did break out of the previous day's high, 5 pips above it at the moment. Putting in a weekly highest open here. Here's the weekly lowest open right there. I'm sorry, that's the weekly highest. The weekly H1, I'm sorry, lowest open. That almost looked like the word high. That was lowest open, highest open, H1. There's the monthly D1 daily lowest open down here. Not sure where there. Okay, there's the D1 highest open right there. Showing the buy zone. The pivot point was below the open, and we did gap up, I do believe. No, yeah, we gapped up. So you can see here that we filled that gap. hit the pivot, so it was all short, but then prices turned right around. So anybody trading that pivot was only good for a couple of pips, but sometimes that's all you need. Rat zone, we only have 19 pips. The zones are overlapping. Looking at the pivot, we've got a weekly pivot here sitting at 108.65. And we already took out that daily pivot. Actually, we've taken out the weekly pivot because it was above the open by all of 1 pip. So those 2 pivots have been hit, and I do believe we've already hit that monthly pivot a long time ago. So the pivots for November as of today have been hit. Okay, we hit that pivot once again, and let me just show you on the week. See, we've got a missed pivot there, and a missed pivot there, and for the month, you see we haven't missed a pivot since 2013. Pretty strong trade. Definitely trades worth considering. You know, somebody was asking me about taking something like 4, 5, or 6 trades on H1 a day, and it's like, why not just 1 or 2? Why not wait for those really good opportunities? Because if you're taking more than 1 or 2 trades on a pair, it's almost like churning. Something, unless you're just scalping for just a couple of pips each time, yeah. But if you're planning on putting a trade on and sitting in on it, I mean, you don't really need to trade more than once or twice in a day. Price action. Okay, prices between the 80 and the 70. Chances are it's not going to stay there. You know, it's got the range, right? Okay, in and out of the wick zone. You see it barely touched there. You really can't see it, but it touched in there, exited, came in here, exited, came back in, exited. You know, some traders out there, I guess, are having a hard time trading the wick zone. You know, they're saying, well, you know, we're going to be stopping out, but I guess I really don't see it. I don't see what they're, how they're not being effective unless they're trying to trade a whole bunch of pairs. And as I've told traders before, you start juggling by juggling 1 ball. You don't start juggling by juggling 3 balls. The same way with trading. Trade 1 method, 1 pair, you know, a dime a pip, till you get it down, till you have some consistency. Because it's practice. You just have to practice over and over. But I mean, I'm looking at this trade right here. If you took that short and it came in here and it exited, well, it's telling you one thing. It exited, so it's going back. It's going up, so take the profit. I mean, what was it? Oh, it was a few pips, a couple of pips. So what? It's better than a couple of pip loss. And if it comes back here, then you can take that exit. Or even if you took this exit, it went in, it came back. But then there's those traders who say, yeah, but if I take this, and then if price had done this, then I lost 10 pips, but here I'm only making 2 or 3. Well, I always counter. If you're up 4 pips for the day, and then you take this and you jump in this trade and it starts coming back, and you're down 1 pip, you're down 2 pip, you know, how much of today's profit are you willing to wipe out? If it's moving against you, it's moving against you. Exit the trade, protect the money. You know, protect the money first, the money that you already have, and then worry about taking more. I mean, some things that seem apparent aren't always apparent to some traders. Excuse me. And sometimes you just have to lead them by the hand. So, you know, for those traders out there saying, yeah, but, you know, right here, that's a 10 pip stop, and you're telling me to take 2 pips, and, you know, 1 loss is going to wipe out 5 wins. And Well, then don't let one loss wipe out 5 wins. That's all you have to do, is not let that happen. Okay, horizontal line trades. As you can see here, there was one little long trigger, but not much is happening this time. I mean, if you put a trade on during this time, I hope you're not looking to scalp. I hope you're looking to build a position that should pay off sometime in the future. As you can see here, not much action at the tick level. Looking at the daily and weekly range gauges. On the ATRs, I know there's a couple traders out there that want to understand ATR, so let me try to explain it to you again. Okay, from the weekly open, what we're going to do is we're going to decide, we're going to look at from ATR 2, I think, up to ATR 14. Okay, I'll just show you right here in the indicator. So ATR, start the loop at 2 and run the loop through 14. Okay, so we're going to look at all the ATRs from 2 to 14. Now, and then the indicator is going to say, okay, which one was the biggest and which one was the smallest? And what it does is it says, okay, in this case, ATR 13 was the biggest, ATR 2 was the smallest. So we'll plot a line here, and shade. So that's the daily ATR. And then we'll also take those values, the halfway point. We'll take half of the ATR. So we add that to the open here, and then we add it to the open right there. Okay, so those are the halfway points. And as you can see, we've already hit one of those halfway points. And for the downside, the same is true. And we do it for the daily, and we also do it for the weekly. Okay, so here's that weekly halfway point on the ATR. Because if you think about it, if you've got an ATR of 50, so that means half of that would be 25. Well, but if you go open plus 25 and open minus 25, you've got the ATR. So it should hit one or both of those, because if it moves the ATR in one direction, it's going to cut through that halfway line. If it moves it in the other direction, it's going to cut through that halfway line. So if it hits the ATR, and it could be even bigger than the ATR, it could hit both lines, take them both out. So that's what we're looking at with that ATR indicator. And it is static, meaning once these lines plot, that's it for the day. They don't move. Now the other indicator, the TRO ATR lines HL, that's dynamic. Every time you get a new high, it's going to calculate from that new high the ATR to the bottom, and vice versa. If you get a new low, it's going to calculate the ATR to the top. So it's saying this is the range of the ATR. And that's how much it should move. If it moves, you can see it. You can see where it is in relation to that ATR, especially on reversals. So that's why there's two indicators, because the HL is dynamic. Every time there's a new high or low, it moves, as opposed to ATR lines, which is static, because it's once the daily opens established, that's what it is for the day. Once the weekly opens established, that's what it is for a week. So, tomorrow, when Tuesday comes, these boxes will be different, but these boxes won't change until next week. So I hope that explains it, because there seems like there was some confusion out there about it. And you can just simply, say, okay, well, I think price is going to go up this week, so I'm going to, go long, and maybe I'll take some profit, hopefully, at the ATR halfway point to the upside. And if you think it's going to go down for the week, then maybe you want to try and take some ATR to the on the week to the downside. Real simple stuff, just applying what we know. Bar since high low. So, fellow traders, this is Turkey Day week, so I hope you have a happy and safe holiday. And as you're trading this week, just keep in mind one thing: it's not what you trade, it's how you trade it. So get out there and drain the banks.